What are the penalties for underreporting Canadian rental income as a non-resident? Earning rental income from Canadian property can be profitable, but ignoring your tax obligations can turn that profit into a costly nightmare. The Canada Revenue Agency, CRA, takes non-resident compliance very seriously, and underreporting your income, whether by accident or design, can trigger severe penalties. Even a small mistake in your return or forgetting to file altogether can snowball into thousands of dollars in fines, interest, and in extreme cases, legal enforcement. Let's break down what happens when non-resident landlords underreport Canadian rental income and how to avoid it. The CRA's view underreporting non-compliance. When you rent out a property in Canada, your rental income is Canadian source income, taxable whether you live in Canada or not. If the CRA discovers discrepancies between what you report and what's actually earned, they classify it as non-compliance. They use several tools to detect this. Bank records and deposits tied to Canadian rent payments, property manager NR4 filings which show how much rent was collected, information sharing with Airbnb, booking sites, and provincial tax authorities, cross-border data sharing through the Common Reporting Standard, CRS. If the CRA identifies income you didn't declare, they don't just adjust your return, they penalize you. Common penalties you could face. Here's what you risk if you underreport your rental income. Failure to report penalty, 10% of the amount you didn't report. Repeated failure to report penalty. If you've done this before, the penalty can double. Gross negligence penalty. If the CRA determines that the underreporting was intentional or careless, you could be charged 50% of the understated tax amount plus interest. Interest on unpaid tax. Interest accumulates daily on unpaid balances, making even small errors expensive over time. Revocation of NR6 or Section 216 privileges. Failing to report accurately can lead to losing the right to reduced withholding on net income. Other consequences beyond penalties. Underreporting can also delay your certificate of compliance when selling the property, freeze CRA refunds, and even result in future audits or investigations. In severe cases, especially if false documents are involved, the CRA can pursue criminal tax evasion charges, leading to court proceedings and reputational harm. The good news, you can correct mistakes. If you've underreported rental income, all is not lost. The CRA offers the Voluntary Disclosures Program, VDP, which allows you to come forward before an audit begins. By filing voluntarily, you can often avoid penalties, pay reduced interest, protect yourself from legal action. This program works only if the CRA hasn't already contacted you about the issue. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.